Hey everyone, welcome to Options with Hans. I am Hans Albrecht, of course. I was a pro options market maker for 15 years and options income fund manager for a decade after that. $1 billion managed, including downside protect funds called Black Swan funds. As always, this is for educational purposes only, your trade, your responsibility. And if you're okay with that, let's dig right in. We've got a cool stock today, one that everyone knows, but I think have got it wrong. But before we do that, please like and subscribe, hit that little bell if you can find it. Grab those free ebooks down in the description. These are fantastic giveaways that don't suck, as I like to say, real actionable blueprints that are going to give you pro insight from an actual pro on how to do this. And when you do that, when you grab those books, I'm going to put you on my newsletter. We talk about all kinds of things, including our two programs, Crypto Income Trader, Leaps Trader, which are fantastic. They've been doing really well. Wonderful reception for those. In crypto income, we just closed a couple of quick trades on Ethereum. We made 35% in one single day, and we have some income layers on another one. So really, really great, smarter ways to grab exposure to crypto. And then, of course, the Leaps Income program, which has been doing sort of insanely well. Look, it's been a bull market, but we are picking some fantastic names to do these on, and everyone's really, really happy. So today, we are going to talk about Apple because everyone is kind of obsessing these days. Of course, I mean, you could say I'm obsessed with AI, and it really is because it's very, very important. We are embarking on this incredibly strong phase of inference. But it's all about these days, who's got the biggest AI model, who's raising billions, who's building some sort of chat GPT killer-like product. And we see there was a study that came out recently, 95% of companies are not really putting AI to use. And this was supposed to be some big revelation. Well, it's pretty simple. That's the case because we're just getting started. It's literally the first pitch of the first inning, and people cannot figure that out yet. And that's why companies like Palantir and Snow are going to do really, really well over time, because they are the ones who can come in, they get the phone call, and they're like the fixer, and they come in and they tell you exactly how to make use of this. So fantastic opportunities there. But the moat is very different for Apple. Apple doesn't have to play this build a bigger AI game, spend hundreds of billions of dollars. They don't need to do that. Their moat isn't about who's first with a model. It's about who owns the pocket, who owns the wrist, who owns the earbuds, who owns the family photos and all the cloud stuff. So think about where it gets interesting in this particular phase. AI inference, when it really starts running locally, we think of it as very cloud-based, which it is now, but when it starts to run more locally, what we call edge, it's going to pull people deeper into Apple's services layer, that wonderful ecosystem. Think of iCloud, fitness, music, Apple Care, et cetera, et cetera. These are high margin recurring revenue stream businesses, and AI is just going to make them stickier. So inference is going to mean smarter distribution of workloads to where it's needed immediately. And that future for Apple is going to be very, very hybrid. We've got cloud on the one side, and then edge for real-time inference in these devices. As I always like to say, Apple is that premier AI in your pocket name that just needs this phase to continue, as it is undoubtedly going to continue in my mind as the benefits of AI spread and spread and spread. That's why I like other things as well, like NVIDIA. It's just going to keep on spreading. And don't forget that AI workloads are very storage hungry. They're processing hungry. That means more iCloud subs, bigger. Look at it. I just had to upgrade my OneDrive the other day. I've just got too much data, right? We're going to have this incredible explosion of data, and it's going to mean more hardware upgrades. This is going to happen. They do not have to reinvent the wheel, which they're not very good at doing. They're not good at innovating, but they are in the right place at the right time. So let's talk about why AI is moving to the edge. So here's the deal. AI cannot just live in these giant server farms, right? Latency matters, right? That's the delay. A robot arm in a factory or your iPhone translating some sort of live conversation cannot wait in the cloud. And privacy matters. Your health data from your watch, your kids' FaceTime video. These are things that people are going to get less comfortable with shipping off to the data center. And cost matters. Streaming everything up and down the cloud. I need more cloud for everything. This is expensive. It's wasteful from an energy perspective for what that's worth. So Edge AI is about AI moving into the IoT. I talked about this 8-9 years ago when I ran an entire suite of Industry 4.0 products. And I said, listen, IoT is going to be the thing one day where everything around us is going to have this capability to generate insight, to pull in massive amounts of data. That is going to be our new world. And so efficient edge intelligence in your pocket, who's better positioned than AI? I mean, they're up there with some of the great companies that are doing it. We saw something come out from Pixel the other day. So great stuff happening, but but Apple just has that chic, that brand, that loyalty, and that very, very sticky ecosystem. Next, Apple as the premier in your pocket. So let's be real. No one is really better set up for Edge AI than Apple. 2.3 million devices active around the world already. That's the largest, most loyal installed base of supercomputers in people's pockets out there. They've generated almost 100 billion in free cash flow last year, right? So I think I'll be the first to admit these guys have not been blowing it out of the park with revenue in any of their particular divisions, but very consistent, almost utility-like. That's how people are perceiving Apple, as a little bit more of a utility. Yet we have this potential amazing upgrade cycle growth that is going to come from AI. Applications of Edge AI. So AI is not just this buzzword. It's happening. It's slow right now, but it's going to get going quickly, and it's going to come, and it's going to find more and more use cases as people develop tools that use AI. AI in itself, $20 for ChatGPT isn't particularly amazing to an enterprise. It's amazing to us. We can do amazing things with it, but eventually there are going to be layers and layers, operating systems that put this AI to use, and that's where the real value is going to come from. And then we're going to have, augmented reality, VR. I mean, you've got everything going on, and Apple is just sitting pretty right in the middle of that. Now, the AI supercycle for Apple. AI is in the cloud. We are moving into this hybrid phase where more of it is going to shift onto PCs, phones, wearables, as I've been saying. So 5 to 10 years from now, Edge AI is going to dominate your car, your glasses, your toothbrush, your home devices, your toaster probably, all running models locally. And that means one thing for Apple, a supercycle. So 4K, bigger screens, 5G, people are going to be excited to upgrade. They are going to need to upgrade, and they are going to be pushing into that Apple ecosystem. Are they going to move? Who's going to say I'm going to move? Oh, I'm going to move my whole world. It's a bit like Microsoft. It's very difficult once you're in that ecosystem to move elsewhere. Apple's going to have something like that. So I think that Apple really has everything going on for it, but people are focusing on the wrong thing. Kind of like when they hammered Amazon a few weeks ago on cloud growth that wasn't as good as Amazon's. It's different. It's a different cloud growth. It's going to be absolutely crucial. And that's why Amazon has come back. When they sold it off, I said, that's stupid. Doesn't make any sense. And we were adding positions. So we've been doing great. We've got positions that are up huge in Apple in Leaps Trader. But we are adding more. I added more yesterday. I'm going to add more today. So if you want to get in on that, check out Leaps Trader. $1,047 for 1 year of following along with a pro doing this in his portfolio. You can't ask for much more than that. So let's take a look at the options. I'm trying to make these shorter. I hope you noticed. Let's take a look at the options right now. Let's take a look at Apple options here. So we're going to scan down here. We can see the term structure pretty flat, nothing too crazy. NVIDIA is a little bit more promising in those longer term options, but this is nothing concerning at all. You might see something a little bit more stressed in the crypto space. But in Apple, we look at some of the longer term options here. Let's get rid of our rank and percentile. We can see this really come down quite a bit. So I think, from that perspective, options are really not expensive. Now, and that's sort of an out of the money. Let's take a look at even like a 30 delta, which is going to give us a view of an explosion type trade. So in Leaps Trader, we have explosion trades, we have core trades, we have AI trades, more specifically as a kind of core trade. really, really not that bad at all. So as I see across the board, some quite a few areas really not pricing in any kind of upside explosive potential, which if you watched my video on the 3 ways that you can win with skew normalizing to the upside, you can win with implied volatility exploding in a sort of a melt up scenario. And of course, you're going to win on your delta if you have, if you're long calls, you're short puts, you're long delta. So this is going to give you, that's going to give you the exposure that you want, but with more ways to win. That's why some of these things look particularly interesting. So we look at Apple, really kind of nice here. Let's take a look at some of the skew. You can look at it on the other platform as well, but we can see in those longer term options, really very typical skew. This is what the S&P would look like. It's called a smirk. And you can see people are really reaching for those out of the money puts and really kind of underpricing the upside. I'm not saying that they're doing that in particular at the moment. If you look at some of the shorter term, you can see that vols are just lower, right? Here's your 52-week average. So options in the short term are cheap. I'm not seeing any kind of excitement out there, which is also kind of emboldening to me, right? I don't see anybody getting particularly excited in Apple in the options space. In fact, maybe the opposite, sort of pushed up skew along with a broader index skew, which has really gone up as people stay long and hedge, right? That's the kind of, people misinterpret that sometimes. They see that downside put skew very steep and they go, oh my goodness, everyone's getting bearish. Not necessarily, right? A lot of the time it's just kind of managers are staying long with protection that affords you the ability to kind of stay in the market. So right now, I think turbo trades look really, really good. Upside just on its own look really good. Why don't we do that? Let's take a look at a couple of trades that are going to make some sense here. So let's look at a couple types of trades. So first, I'm going to say this is more of like a leaps core type trade where you really want something that's going to be a little bit more like a stock replacement type play that you want reactivity out of. You're going to get that out of a higher delta. So something like a kind of 79.80 delta. So get in here, instead of buying 100 shares of Apple for 23 grand, you're going to be able to pick up something that's going to be quite reactive to Apple's price, at least 82%. And we know that delta is going to rise over time and this is going to start to move. So we want something that's going to really start to move to the upside, and more so as it continues to move up. So $4,700 versus 23 grand, you can get very, very similar exposure. So I'm going to grab one of these and throw it into our upside profile, and you can kind of see how this is going to look, right? It's pretty simple. I mean, we know what a long call looks like. This is also going to look like long stock with an out-of-the-money put is going to look very, very similar. A married put is basically just a long call synthetically. So we can see that these trades, a lot of people kind of put on these different trades and they think they're very different things, but a lot of them are the same. And these are the things you learn in mentoring with me. You learn to understand synthetics and the way that you can kind of mix and match and use options like Lego to achieve certain goals. So we do something like that. That's going to be very nice and reactive. I would not be selling any shorter term options against this right now. So this is something, when I put these on, I typically want to give them a little bit of breathing room, get a little bit of reactivity out of that so that eventually the math makes more sense if I get in and do some sort of shorter term poor man's cover call type trades. I want to make sure that math makes sense. And I've done another video on that, to how you do that, which is very critically important. A lot of people make that mistake of not looking at the math and then getting themselves into a little bit of trouble. Now, alternatively, this is something that's going to act quite well when the stock goes up, and it's going to give you a nice cushion. If the market gives up a ton or crashes, something like that, you're really going to have that limited risk that you get. A little bit of time value in there, there's no question about it, but vols are low. We just looked at those prices. They're very, very reasonable. Now, if we want to do a more of an explosion type trade, June 2026, you might go into, say, like a June of next year 255 call. Look maybe for like a 40 delta, between a 35 and 40 delta. You're going to get into something like that for $12. So for the ability to control 100 shares of Apple, it's going to cost you $12. Now, these aren't going to be as reactive, but you're going to get some nice leverage to that, especially if you grab a couple of those. You want to be very, very careful with your budget. You don't want to overdo it. You certainly don't want to buy 4 of these just because you're going to spend the same as if you bought 100 shares of stock. That's very, very dangerous. So you want to size appropriately. And as we get in here, $12, that's something that's going to benefit. Remember, I talked about the 3 ways: the implied vol explosion, you got that skew moving for you, you've got the delta, of course, not as reactive as that, deeper delta, but going to serve you very, very well. That's going to be more like a leap explosion type trade. And I look for those all the time in Leaps Trader, and we do them in crypto as well. So those are very, very interesting trades that you can do. Now, what I would also do is you could pick up some downside hedges as well. So you could go in, and this is what I'm doing on NVIDIA into the print tonight, is I'm picking up some longer term calls. I'm bulled up on NVIDIA. I've got too much already, but for my students, I've put on a little bit more, and I've picked up some downside hedges out to October, not September, out to October. And that's another video that I'm going to do hopefully a little bit later on today, where you pick up a little bit of a downside hedge that's going to get you protected in the short run, right? Because anything can happen on earnings. I think NVIDIA ultimately goes to $300 plus, 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 plus. I think they're in all the right places to build out this global infrastructure need from AI in the inference phase. So I think it continues to go, but in the short run, we know that stocks can do just about anything, and we want to be prepared for that. And in fact, we want to also capitalize on something like that. So what we can also do is we can pick up extra contracts to give ourselves a little bit of that convexity to the downside. So anyway, that's a couple trades on Apple that I really, really like going forward. You've got some time on your side, which is one of the best things to have when you are long options. And I hope you guys enjoyed that, and we will see you in the next vid. Check out the programs down below: Leaps Trader, Crypto Income Trader, et cetera, et cetera. Enjoy your day.